Hello traders, nice short video tonight because the US are off tomorrow and there's literally no data tomorrow, so I've decided to put the Scalper School live trading session and the normal trading room back until Monday. Traders Roundtable will of course be there on Monday. Now make sure you log in for Traders Roundtable because I want to talk about hedging. Alright, very important subject of hedging, which if you're not hedging, I want to give you some ideas for how to extend your portfolio and your trading potential. Right, so you're looking at the moment on the S&Ps, the spiders. This is the daily left, weekly middle, monthly right. Look on the weekly, two decent weeks to the upside. So we've had some short covering as well as the bulls coming in, and of course when you get short covering, what do you get? You get short sellers having to buy their positions back, which has chased the market up. Look on the daily chart, and what chart pattern you've got is we are up against the September 17th highs. So as we come to our tests on Tuesday, we will have had the Chinese trade balance. That's one of the most crucial pieces of data that we've got during the week. So I think what happens when we open up our charts on Tuesday could be very, very telling with what we might expect for the rest of the week once the US come back to their desks. Right, so be very, very careful at the moment. If we do close above 2020, then with hindsight we'll have had a move up to 2030. That is a little joke there, which is not very good. Ha ha ha. And but anyway, that's what I'm looking at. So I'm looking for some weakness now on the back of 2 weeks of decent selling. At the very least, I think we're going to get some pullbacks. So watch out for that. So let's now move to the dollar index. Dollar index is very weak. That's 2 weeks of lower closes in the middle. We were very extended and very high up there at the summer highs, and now we are potentially rolling over, or we have already rolled over some. The question is, can we push over some more? Chart patterns. Well, the fib says it all. We struggle with 50% on this daily chart, with the highs at March this year and the lows at August this year. So we're coming into support. Let's take this trend line. It's not far before we drop into quite a key trendline support area. In the meantime, I'm still looking for dollar weakness. We have US inflation on, let me see what that is, on Thursday. Beige book on Wednesday. That's not normally a massive mover. And then you've got job openings on Friday, US job openings on Friday. But overall, looking for you've got to look for continued weakness in this if you trust the charts, which of course we must trust the charts, otherwise no point in being technical analysts. Okay, so what would I look at here? Well, I would primarily on the dollar pairs, I would look to buy this euro. 2 weeks stopping bar last week, buyer's bar this week, and a breakout on the daily. So I would look to buy the euro at 113 with a view to at least testing 114.50. But I'm going to do that on Tuesday rather than Monday. Okay, so if we now cross over to the pound US, that's had a good run. It's pushed into the 50 EMA, pushed into the resistance, the lows of mid-September, and already, I mean, that's actually a sell signal, a short-term sell signal, pushed up and then immediately closed lower. In the meantime, the weekly has sat on this fib level and closed higher. And the monthly, we've had 3 months of lower closes. So the stronger chart out there at the moment is the euro, and also like the euro yen even more. I like the way we have all moving averages underneath us in the monthly. We've closed above the 50 EMA in the weekly, and we had that nice breakout pattern on Friday on the daily. Okay, so I'm going to leave it there. What I will do is just look across the Aussie, the commodity currencies that have had some really nice moves. Not too late to get in them, so we'll go over that on the Traders Roundtable as well. Oil, and coming to this 50 area, there's a lot of resistance up there, so we need a pullback, and 47.80 is the most likely spot for that. So let me just mark that on the 47.80. No, I didn't want that. I wanted a line. $47.50. There you go. A massive weekly support at $47.50. So again, nowhere near too late to get in on this chart. I think that there is scope for this time of year, this part of the season, this part of the cycle. There is scope for that to go further, and that's what I'll be looking at for in the oil. Okay, so if you haven't got the login for Traders Roundtable, let me know and I will send you a link for that. Scalper School, really pleased with the results of that. I'm going to, one of the reasons why I'm talking about hedging is because I think I didn't spend enough time talking about that. So I will do a sort of summing up and an extra session for Scalper School students, Scalper School members I should say, on hedging, and want to make sure that we're all clear about what the setup is and how to prepare for the open of the markets, forex and indices, and of course data trading. That was the main part of the Scalper School. All right, and so be careful because of lack of data and lack of participants on Monday, and then join me for Scalper School for Traders Roundtable. Sorry. And I have a good session, good thorough session, and go through some couple of critical stock sectors as well. Thank you for joining me. My name was Mike Hamilton, and see you on Monday.